This is IFV, the web space with your dose of business and financial news. In full view, we're making your business our business.
Welcome to In Full View. I'm Marcella Palmer. We're bringing you the week's medium and small business news from New York Entrepreneur Week at the Scholastic Auditorium in Soho. Entrepreneurs at all stages of business development are attending this semi-annual event for workshops, panels, and a chance to network.
New York Entrepreneur Week has been in production now for a year and a half. We've gone from a small little event of about 200-300 people to now this week we're going to have roughly about 2,000 to 3,000 folks coming by. It's a semi-annual event. We hold it every April and November, and this year you can expect a relentless business plan competition, inspiring keynotes from two folks who actually don't just come from the entrepreneurial world, but more of a political background, so to give a little bit of a different edge.
Due to feedback from our previous New York Entrepreneur Weeks, one of the biggest things that we've moved forward with this time around is the networking. And we've tried to implement that in different creative ways. One, we have now introduced waffle breakfasts where people can come on site up to an hour and a half earlier than the first panel kicks off and actually have breakfast and hang out with the entrepreneurs that are attending, the speakers, the board, and the rest of the team. Also, something that's become very successful just over the last few days, it's already really apparent, is the longer spacing between each panel, where people can, after the panels are finished, go out to the auditorium and network with the speakers.
A great idea for a product or service, coupled with a passion to see that idea grow into a viable business, for some entrepreneurs often means going after financial backing. The money it takes to move that big idea for some begins with a loan from friends and family, a grant, or a bank, while others turn to angel and venture capital investors. We've spoken to angels and VCs to find out what they're looking for before investing in a budding company.
BHV is focused on enabling entrepreneurs. We are a combination of providing strategic business development as well as proprietary seed stage capital. And we work with entrepreneurs, some new, some old, and we've done 7 transactions in the last 7 months. We're normally the first $0 to $50,000 checks.
Lots of entrepreneurs out there. What catches your eye as far as an entrepreneur, and what makes you say, hey, I'm going to invest my money here?
So I would say that it's 3 really simple things. Entrepreneurs that are prepared, entrepreneurs that are honest, and entrepreneurs that are good people. It's a pretty standard criteria. I've been doing this for long enough that I think I have a pretty good nose, and so it all comes down to the people.
That you see entrepreneurs making when they approach you, and how can they simply clean that up so they are more attractive to you?
I think the most common error is lack of creativity in terms of how they put their business together, trying to be too much of somebody else's business, trying to, it's funny when you see 4 different businesses and their successful exit is a sale to Facebook or Google. So I think you have to be realistic about what the real opportunity is.
One more question. One recent transaction, as much as you can talk about it, that really impressed you, that really caught your eye, that you might hold up to an audience and say, these guys or these gals did it all right, do this.
So the company's still in stealth mode, but it's called Flow Search. And it's with a group of entrepreneurs that I've worked with in the past that have had some successful ventures in the past, and I think they have a vision to change the way data and applications interact in the next generation.
Zelkova is an early-stage venture firm based here in New York. We make investments in early-stage startup companies, primarily in the software as a service, digital media, and clean tech space. We have about 22 active companies spread out across the country. About 40% of them in New York, 40% are in San Francisco, a few in Boulder, 1 in Boston, and we actively look to invest in those cities and some other cities here in the U.S., primarily U.S.-based though.
With times being as they have been financially, economically, have the companies or the number of companies you've invested in over the last year or 2 or 3 taken a hit, or are you guys just more careful?
So I like to say that early stage investing is kind of like scuba diving, right? The lower you go, the less the weather up top affects you, right? And the macroeconomic trends are obviously important as companies get closer to some type of selling products or selling the company itself or trying to go public. But we're investing in so early that a lot of these are just concepts and ideas that are going to take a year or two just to build that out, that what's going on today in the economy is not what's going to be going on in a year or two in the economy. In fact, I like the fact that when we launched, we were in a downturn because you knew that at some point it would go up versus if you're on upswing, how do you know when things are going to turn around and go down? So for our companies, it doesn't have a major impact on the build side. I'd say it has an impact from their perspective on raising capital, but that's what we're here for.
Everybody wants money to grow their company, especially early stage or bootstrappers. Maybe not everybody, but a lot of people do. How do you know if you're right for VC?
What I would say is there are very few new ideas, right? There are incarnations of existing ideas out there. Figure out if other people who have tried similar things or doing similar things have been able to get VC money, right? If you are in an industry that is typically VC backed, right? The VC money or VC investment accounts for a tiny fraction of all business investment each year in this country, right? There are other sources, whether it be loans, whether it be government grants, whether it be friends and family, that are the vast majority of money that go to starting businesses. So, the VC industry is kind of viewed as that sexy, fun, everyone wants to get there, but we are really a tiny portion of the overall business funding in the economy. I'd like to think that most of our companies are doing well. Some that are really really taking off are companies like Clout and Food Spotting, and these are companies that have really built a loyal following around users and customers, and they've hit the network effect, so they've hit the point where people are talking about them, where it's significantly growing, and they're two good models of how do you really bootstrap the thing, because they were both started on a shoestring budget and they grew quickly and they got the investors excited, right? And investors get excited by success, and they had it, and that's what enabled them to continue to grow and see the success they've seen.
That's all for this week from the IFV News team. Thanks for joining us from New York Entrepreneur Week at the Scholastic Auditorium in Soho. Be sure to check back every day right here at ifvnews.com for the latest on what's happening around the globe in the medium and small business world.